Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Monday the 5th of August 2013. Well, we are in this summer market, as they say, and when you're in summer markets, what it tends to mean is that there's a lot of people on holiday. Trade can be quite thin, and it also sometimes means that the big numbers, so the big technical levels, really start to take precedence. Well, that seems to have been the case today, particularly for cable. Now, we have had a lot of fundamental data, so even though it is quiet out there, the data schedule stays the same. So don't get too quiet, don't move too far away from your trading platform. But this, as you can see, is the cable chart. It's a daily chart. It's an Ichimoku cloud chart as well, because cable had a very big move earlier. It jumped up on the back of an extremely strong UK services sector PMI report, which rose to its highest level for nearly 7 years. So the highest level since 2006, which is pretty impressive considering the UK, people were very worried about the UK's outlook at the beginning of this year. Well, it looks like the third quarter has really got off to a strong start with very good gains across all sectors, really. Service, manufacturing and construction PMIs for July, very, very strong, well above 50 now, which points to some very good growth for the third quarter. But what has this meant for the pound? Bearing in mind as well that we are in these summer markets. Well, the pound has recovered. It's really shot higher. It broke above some key, or it held good support at some key resistance levels, some key daily moving averages around 152.80. Once that release was announced, we got all the way above 153, but we have failed around 153.80, just ahead of that 154 level, which also coincides with that daily Ichimoku cloud resistance there, which suggests that people are willing to take profit. So again, a bit of another torturous round for the pound. However, if we do continue to see UK outperformance, whereby the UK economy is outperforming the US, the Eurozone and even China these days, then it's hard to see how we can't have a medium-term grind higher in the pound, and that's what we expect, unless we get some very strange economic data. Now, the big risk for the pound this week, of course, is that inflation report that comes out on Wednesday. If that's very, very dovish, then we could see the pound fall back. However, what with this better tone to the economic data, maybe the Bank of England won't be as dovish as some expect, which could then put some more upward pressure on the pound and help us get through that 154 resistance level towards that 155 level. Now let's also take a look at dollar yen. As you can see here, this is a daily chart of dollar yen. Dollar yen was a big mover on Friday. Remember, we had that payrolls report and it was disappointing. Well, the market took it as disappointing. In fairness, it was quite mixed because we did also see a drop in the unemployment rate. However, that didn't help dollar yen, and we really backed away from those high 99s. And currently, we're just range trading in the middle of about 98.5. And we don't really see that changing. We haven't got too much US economic data this week, but remember, later this week we do have a Bank of Japan meeting. If they're in any way dovish, then that could really boost dollar yen. But really, in the absence of a strong payrolls number, it's going to be hard, we think, for dollar yen to crack 100 as we progress through August. However, one thing we would note, 97.50 is looking like very, very good support on the downside, while 99.50 is really capping the upside for now. So a nice range for you to trade, and that's, again, be very nimble, keep your stops tight, and do watch out for those ranges. Everybody, thank you so much for joining. Please join us soon for more. Bye-bye.